Gold's price opened the year in a relatively stable manner, with no major fluctuations in the holiday period. In today's report, we intend to have a look at the Fed's stance and how it may affect gold's price, upcoming financial releases that may prove to be market movers for the precious metals price, and lastly, a look at geopolitics. For a rounder view, we are going to conclude the report with a technical analysis of gold's daily chart. The Fed seems to continue to hesitate in cutting rates further. Currently, Fed fund futures imply that the market expects the bank to proceed with a rate cut in the May meeting and after that remain on hold until the end of the year, with a December 2025 being currently highly doubtful. Yet in its latest dot plot, the bank signaled 2 rate cuts within the year. We also note the latest comment by Fed Board Governor Lisa Cook, which may have been a bit more dovish. Hence, should the Fed start sounding more dovish than what the market expects, we may see gold's prices getting some support. On Friday, we highlight the release of December's employment report as the next big test for gold's prices. The NMP figure is expected to drop to 154K after November's stellar 227K, the unemployment rate to remain unchanged at 4.2%, and the average earnings growth rate also to remain unchanged at 4.9% year-on-year. Should the rates and figures come in as expected, we may see the drop of the NMP figure disappointing traders somewhat and thus allow for a more dovish stance on behalf of the Fed, thus weighing on gold's price somewhat, albeit most would have been priced in already. Yet the actual release is well known to take the markets by surprise, and should it show a tighter than expected employment market for the past month, we may see it weighing on gold's price and vice versa. Since our last report, there were substantial developments on a geopolitical level, with the situation in the Middle East still being unresolved, and despite market worries easing somewhat about the issue, it's still simmering under the surface. Also, the war in Ukraine is ongoing, with the Ukrainians making a new attack. In both cases, the incoming Trump presidency is expected to be a catalyst which may intensify uncertainty and thus act as a supportive role for gold's price. Also, we note that despite gold's price trading just below record high levels, China's central bank expanded its gold reserves for a second month in December, signaling renewed appetite after temporarily pausing purchases last year as prices soared. Should we see PBoC continue to be a net buying position in January, it could also provide a boost to gold's price. On a technical level, gold's price remained relatively stable, well within the boundaries of the 2,685 resistance line and the 2,600 support line, as the precious metals price continues to be moving in a sideways fashion. Hence, we maintain our bias for the sideways motion to continue for the time being, and note that the RSI continued to run along the reading of 50, implying a relative indecisiveness among market participants. We note the slight upwards movement on Thursday, yet for a bullish outlook, we would require a clear break above the 2,685 resistance line, with the next possible target for the bulls being the 2,790 resistance ceiling, which is also to record high level for the shiny metal. Lastly, for a bearish outlook, we would require a clear break below the 2,600 support line and the precious metals price to start aiming actively for the 2,475 support base. Those were the top financial stories for this hour. From all of us here at IronFX, we wish you a solid trading.